Hey, welcome to Rate Ready Radio, our podcast about mortgages, real estate, and all things that go with houses. I'm John Ardito with Mortgage Financial Group, and I'm just welcoming you all back. Today, I'm joined by Zach Brock with Insurance Group of Central Florida. We're going to talk a little bit about insurance and how that affects mortgage payments and the things you have to have on insurance policies today, because when you do a mortgage payment, it's not just about the mortgage itself. It's all the incidentals that go with it. When you rent, generally, maybe you get a renter's policy, but you don't necessarily get a homeowner's insurance policy.
Sure.
So, Zach, welcome. Kind of tell us a little bit about you and then a little bit about what we're going to be talking about.
Okay. No, I'm really excited to be part of this. My name's Zach Brock. I am with Insurance Group of Central Florida. I'm local. Been here pretty much my whole life. I went to Mount Dora Christian Academy at that point when I was there. It was Mount Dora Bible. Graduated from there. Went to school down in Tampa. Came back home and had to get a real job. So started selling insurance with my family and just kind of stumbled upon the local people here just as things go. And I've been doing it for several years now and been blessed to work with some of the really fine local lenders. Makes my job a lot easier when you deal with professionals that know what they're doing.
Yeah. And that's why we like to work with you too, Zach. Because you're local and you understand what's going on in our market.
Yeah, our market. I've found that that's really beneficial for the buyers, my potential clients that end up being clients with me for years and years and years that were here. You can call me and I answer the phone and, I live here. So
and we appreciate that. So, when somebody mentions insurance, they first thing everybody says, oh, insurance companies don't want to pay anything. So it's just something you have to have.
They're right about that.
It's true. We know that, right? So, but it is a necessary evil, if you will. You have to have insurance, especially if you're getting a mortgage today. You've got to have insurance. You've got to have coverage to protect the lender and their portion of the property until you get that loan paid off. And then you do whatever you feel like you need to do, which I never recommend somebody not having insurance on their house.
Yeah.
But talk to us a little bit about some of the differences that are out there. I know there's like cash value and replacement costs and some different things like that. Talk about that a little bit so people understand.
Yeah. Well, from what I understand, and I could be wrong about it, and you can correct me if I am, typically when I'm dealing with somebody that's purchasing a home, got to have replacement cost on the dwelling. It's just a loan requirement. So most of the time, that's the policy that I'm selling anyways.
And what does that mean? What does replacement cost mean?
So when somebody comes to me, the first thing that I do is we take the specs off of the property appraiser. I look at the listing. I input those features that I see into whatever, carrier that I'm quoting through. Mm-hmm. They have a replacement cost estimating system. So they take the features of the home. They say, hey, with this size of the house, this year built, this construction type, here's what we think it would cost to rebuild your house. Maybe it's not so much the market value what you could sell it for, because a lot of times I see, a house is being bought for $500,000, but I'm insuring it at $400,000. Right. Well, the land has some value there that we're not insuring. We're insuring the dwelling itself. But we basically take what that value would be. The insurance company determines, hey, this is what the replacement cost value of the home would be. If it's knocked down to the slab, we think it would cost this much to rebuild the home. And that's typically, I'd take that value and I go a little bit above it just to give some buffer room, just as a precautionary, and, confirm that rate or that coverage value with the client to make sure that they're comfortable with that too, and set it at that. And that typically suffices for the loan. And
so when you're looking at it, you're looking at whether it has a swimming pool or what kind of features of the house itself.
Correct.
Okay. And then, so if somebody says, so I have this happen a lot, especially with manufactured homes. Somebody will get an insurance quote and I'll look at it and I'm like, it doesn't say replacement cost on it. And they say, well, no, it's an actual cash value. Mm-hmm. What's the difference on the actual cash value versus?
So they're going to depreciate it. There's a scale out there and each company has their own, based off of the age of the home. They'll say if it's actual cash value, we're going to take the home is worth $200,000, but it's 35 years old. So we're going to depreciate it by this percentage. And if there's a claim, this is what we're paying out to you. Gotcha. And that's how they do it. So basically, it's like eBay pricing for the home. If you bought a television today for $1,000, well, 2 years from now, that TV is no longer worth $1,000 that you paid for it. It's probably $300 on Facebook Marketplace. Yeah. That's kind of how they assess that.
Gotcha. Yeah, and that's some of those things when we talk about lender, and you're correct. Most lenders, pretty much all lenders, require a replacement cost policy. And if you don't have replacement cost, you have to have actually coverage for the loan amount, and which means, and from what I've seen, basically that's just a replacement cost. Because that's the only way to truly get that number.
Sure.
And so that's kind of important. We're in Florida, and storms that have just rolled through. We know that all kinds of nightmares happening with that, and with insurance carriers coming in and out of the state, and that happens all the time. We kind of get used to that with Florida, who's going to
Sure.
stay, who's not going to stay. So, what are some of the things that you're seeing that are changing out in the marketplace today? I heard some things about citizens and that kind of stuff, and
Well, it seems like you said, it's always a whirlwind, and it seems like every week there's something new. And we at Insurance Group of Central Florida, we probably have 35 or 40 different insurance
oh, that's important.
carriers
Yeah,
that we work with. And so it's hard to keep up with all of them all of the time, trying to stay on top of, okay, this company wants, roofs to not be over 15 years. This company doesn't care if they're 20 years or older, and so navigating that has been tricky over the last couple of years, because of just how much turmoil is in our market,
correct.
and the storms definitely don't help with that because carriers shut down when storms roll through a lot of times,
Yeah, everybody gets scared. Everybody
Yeah.
gets scared. Dollars start spending.
Yeah, exactly. But yeah.
Yeah, so that's again, you kind of look at it. You got to look at it from a standpoint when you're a buyer and you're looking. It's important to shop around. It's important to talk to different people. You don't want, and I'm not trying to knock any one company, but you don't want to necessarily just say, "Oh, State Farm said this, and we're going to take State Farm because mom and dad had State Farm for the past 40 years." Doesn't mean that you're going to have the best insurance or the cheapest insurance or the least expensive. I want to say cheapest, but least expensive insurance. And sometimes it just comes down to understanding that when you go to buy a home, and for our purposes as a lender, when you're trying to qualify for a loan, that insurance payment can make a difference because
Sure.
lately we've seen some insurance payments that are, $4,000 a year, $5,000 a year,
Yeah.
depending on the age of the house. Is the roof 20 years old? Can you even get insurance if the roof is 20
Sure.
years old? So there are so many factors that we're having to put into loans now or considerations
Yeah.
for clients because we're looking at it. It's hard enough to get somebody to qualify for a loan when their mortgage payment is going to be in the $2,300 range and they're a first time buyer.
Yeah.
But you tack on a $5,000 insurance policy and you have a whole nother animal,
Yeah.
right? Trying to get them to qualify. And so it's important to deal with the professionals and deal with locals that know the market here
Sure.
or wherever you're at. You want to deal with the local people because they understand the different subdivisions and the different areas and the Eustis and varies, the cities in Lake County, or again, wherever you're at, North Carolina, Georgia, it doesn't matter.
Yeah.
But making sure that you're working with locals that understand the market.
I agree. I think that we're very fortunate here, in this little Tavares, Mount Dora, but in Lake County in general. I have several cousins, friends that work for different competitors, and they're all very good.
Yeah.
They're very good at their job. So I know that, I got friends over in Urban Young, got friends over at Merrill Insurance, Guardian Insurance over in Claremont, giving them all shout outs.
That's what I was going to say. We're going to take a little bit for you guys,
Yeah.
Merrill and the rest of them. Yes.
A lot of them are my family, but they're knowledgeable and they do a good job, and that's really what you want. Is just, I think that I'm in those word of mouth groups too that you see
Sure.
on Facebook,
Sure.
and there are a lot of really positive comments about several local agents, and that's a good thing.
Yeah.
You want that in your area, and so
Well, you want to be the go-to,
yeah,
right? You want to be the go-to person. You want to be the go-to company for that stuff. You want to be the expert in your area, in your field.
yeah,
And one of the reasons why I love working with you because I know when I send a client your way, number one, they're going to get the service that they can't, that'll be surpassing nobody. The second thing is I know you'll take care of them.
sure,
And that's important to us because, being a smaller lender, what we do is we thrive ourselves on the fact that we are dealing with customers over and over again.
Yep.
I've got customers that I dealt with 20 years ago. I just did a loan for somebody's son that I did a loan for 15 years ago.
that's awesome.
So those are the things that we want. And so I know when I give a name to you, I know they're going to be taken care of and I don't have to worry about it. And I don't
Sure.
have to think about it.
Yeah.
And so that's really important to us. So let's talk a little bit about, because especially in Florida, let's talk about flood insurance a little bit.
Okay.
Flood insurance is a little bit different animal, right? Because
Yeah, it is.
there are caps on how much you can get for flood insurance.
That's
Talk a little
correct.
bit about that.
Yeah, so flood insurance, the NFIP, the National Flood Insurance Program, is basically governed by FEMA. And there are limits on a standard flood insurance policy, there's a cap. It's $250,000 for the dwelling, $100,000 on your personal property within the home. Typically that suffices for the lenders. If I write the
Yep.
policy maximum, as far as I know, it's always never been a problem. There are other companies out there that will go higher than that. They're not regulated by the NFIP. It's excess carriers that will
Gotcha.
do stuff, for the person that most people don't want flood insurance, oddly enough, even though we are in Florida and it's a giant thumb sticking out in the middle of the ocean.
Yeah.
We flood here,
Yes.
and it seems like we've been flooding in places that I've not seen flood before.
For the last few months, it's definitely been happening.
Yeah, and I've written more flood insurance because of that, which I guess it's good and bad. You don't really want people to be going through that sort of thing. It helps our agency out, and I do think that it's probably important to carry here in Florida, because it is just so low lying, and there's so much. The biggest thing is probably there's so much new construction, and the way that the water flows has changed so much because of all the new construction. The maps just can't keep up with it. So you might be in an X zone, but they just built a neighborhood, a couple blocks away, and they built it 12 feet higher than what your house is sitting at. So now all that water that used to drain there is now draining on your property.
Exactly. And that's part of the issues. As buyers, when you're looking at houses, and realtors will talk to you about this too, lenders will do it. We pull flood certifications to see what kind of zone the last map told us you were in. Right?
Yeah.
And there's different zones, and not to get too crazy, X, AE, all these other different zones, and X generally means you're not in a flood zone.
Correct.
You're okay. You shouldn't flood in the next 500 years.
Yeah.
Right. However, we've seen with Helene and Milton, we've seen some hurricanes come through that there have been areas that have flooded in the last 500 years. They just happened. So it's not very an expensive policy if you're not in a flood zone. Correct?
No, typically not. I think I wrote one a couple days back where the person just wanted to have flood insurance on the property. $250,000. It was like $400 for the year, which, it can matter in a loan, if somebody's trying to qualify and it's, really close, but just for the average consumer, as far as insurance goes, it's inexpensive because the policies we're seeing these days. Exactly.
Because there's difference between, from what I understand, there's differences between like a flood insurance and then a windstorm policies and the hurricane policies we have to cover here. And if you say certain things, it's not covered under this policy, but it would have to be covered under this policy. And so there's a water intrusion and that's not flood or something.
Exactly.
And so there's you definitely need to be working with experts that know what they're talking about, because you need to make sure you have the coverage you need.
Sure.
It's vital to make sure of that. And again, local experts in the area know best. And you got to trust that. Right?
Sure.
You have to trust that. So, insurance is never a fun thing to talk about. Nobody ever really wants to have insurance.
Yeah. I don't know how many viewers you're going to get on this one, because who wants to listen to the insurance guy talk?
No, you know what? It's an important thing though, because it's not only a protection for the lender. If you're getting a mortgage, you're borrowing $300,000, obviously. Us as the lender, we need to be protected. Our money needs to be protected. We need the house protected. We need to be able to get a replacement cost so that we know the house can be rebuilt.
Sure.
So, we're in a position where that insurance policy is vital, but people don't think about the incidentals. And inside of that policy is personal property and things like that. And so how do you handle and let me say it this way. I remember back in the day, and I've been doing mortgages for just over 33 years. So back in the day, on the old applications, there used to be a box on the application that would say household goods. And I made the mistake when I was a very young loan officer of asking somebody, well, what do you think you have in your household good personal property? And they started listing their dishes and knives and forks and everything else. And so we kind of just came up with some numbers. Okay, you're 40 years old, you got about $40,000.
Okay.
How do you figure out, or how do you help somebody try to determine, hey, you should have about $100,000 personal property coverage, or you know what, you need $200,000, you need $50,000, because that can make a difference on the policy also as far as the premiums are concerned.
Yeah, that's
true.
true.
How do you help them with that, figuring that out without having to have them start listing everything they have?
Well, recently, just because of how expensive insurance has become, I definitely want the client to make that decision for what's best for them.
Sure.
So I tried to do my best to inform them, hey, this is what we can do. But I want to make sure that you're getting the best bang for your buck. That if you think that this isn't that important to you, well, and you're really price concerned, let's get the rate down for you then. Or if you're more concerned about your peace of mind, hey, I want to make sure that, if I lose everything in a house fire, I'm getting $200,000 worth of new material, and you want that peace of mind, well, we can do that too. I just want you to be as informed as possible so that you can make the decision that's best for you.
Do they do a replacement cost on personal property too?
You get the choice.
They
So
do.
you can
They do
either
that.
have
Okay, I
actual
didn't know
cash
they did
value
that.
or replacement cost. And
Okay.
that's one of the main things I end up with every person I talk with that I sell an insurance policy for. I want them to know that, hey, there are two options for you in this. The actual cash value is typically several $100s less expensive, but it's a lot less coverage.
Right.
Replacement cost is available to you if you want it, and it's a lot more coverage. But again, when you're dealing with somebody that's buying a new house,
Mm-hmm.
they're very concerned about
What that payment's going to be.
what that payment's going to be.
Yep.
And so,
Because we're scaring them on this side with, your taxes are going to go up, and
yeah,
we got to add an insurance premium.
sure, but that's a discussion that we do have, and there's no right or wrong. It's you just want to be informed as the
Right.
buyer. You want to make an informed decision, not be misled. And so
Correct.
that's what I try to do is just say, hey, here are the basics of the policy. Let's do what you want to do.
It's something you just said there is very important. It's informed consumers, and that's really that's why I created this podcast.
Sure.
I was listening to so many people talk about different things in mortgages and real estate, and not that to say that everything was wrong, and it's not, but I wanted something that would be available to consumers that they would understand that there is information that they can gather from real people, from experts in fields, and help them understand what they need to ask if they're talking to a different lender, if they're talking to a different insurance company, the things that they need to be asking to make sure that they are truly informed
Sure.
and getting what they need to have, not what somebody else thinks they need to have.
I agree.
Right. And that's really important. And trying to put that together. And that's really why this podcast was created. So, it's again, we look at scenarios where the mortgage payments matter so much, and having to deal with different premiums and having to deal with adjustments and that. So talk to me about it's like if somebody got an insurance policy, and this is not, I'm hoping this doesn't get to a position where it would hurt anything for you.
Okay.
But if somebody had an insurance policy, are they like stuck with that policy? Do they have to stay with that policy for the years? Like, you signed a contract and you're there for a year?
Most of the time, not. Flood insurance,
Okay.
normally, yes.
Okay.
Flood insurance, once that payment has been made and the contract has been signed, it's with the government and they're not giving you the money back. It can't just be canceled.
Okay.
You cannot pay it next year and it be canceled, or if you pay off a loan and you can prove that there's no longer a loan requiring the flood insurance, you can cancel it at that point.
Okay.
But that's the one that you can't just go and cancel that at will. Pretty much everything else, you can do what you want.
So if somebody closed on a house and they have a premium and they've got a policy and everything else, and for whatever reason they're not getting along with the agent or whatever has happened, they can come to you and say, hey, can you give me a quote on what this would look like? And it really doesn't matter when it is, as long as everybody gets informed that it's been changed. And
most of the time, yeah.
Not to say we're trying to take business from other local people, but
yeah,
just
most of the
because
time
people feel beholden that, okay, well, I'm stuck.
Yeah.
And you never want anybody to feel stuck.
Of course. Yeah, no, that's something that can typically be done. Insurance is prorated.
Right.
So, and a lot of times it's coming from a lender. So the money's been spent by the lender to you're paying it in your monthly payment,
correct.
but that's where we got it from, was the escrow account. And
Right.
so, let's say that you had it in place for half a year, you're going to get half of the money back if you cancel it midterm.
I got you.
And you can switch, or there's also what they call, a lot of companies offer like agent of record changes.
Okay.
So, my agency, we represent 35, 40 companies. The next agency down the road does the same thing. We're dealing with the same companies. It's not like I got, all these companies and they have those companies and they don't mix. No, that's not normally how it works.
So if you have somebody that's got a citizen's policy under John Doe, they could switch that citizen's policy to Zach Brock.
With the signature on a piece of paper.
That makes sense.
Yeah.
That
And
makes
so they
sense.
can just move it if they're not getting along with that agent. If the agent is unresponsive, they feel like there's been some deception, stuff like that. But that was still the best policy available, or
at the time,
at the
because they didn't have your name.
Yeah,
the lender wasn't good enough to give them your name.
Maybe, or there's a circumstance there that they would feel hesitant to switch. Like when they got the policy, the roof was 10 years old, but now it's 15 years old. But now, for whatever reason, the agent that they like left the agency, and so they have no affiliation with them anymore, no
Gotcha.
allegiance to them. They can just say, "Hey, Zach, I want to keep this policy, but I want your agency to service it." A lot of the companies will let us do that. Yeah.
That makes a lot of sense. That makes a lot of sense. Well, Zach, I appreciate you coming on today. Like I said, we talked about, we joked about that insurance is usually not a fun topic, but ladies and gentlemen, it absolutely is necessary, and it is necessary to be informed of what you're getting, because when you get that policy, it's 80 pages and real small font print, and you're not reading it. So you need to have someone that's knowledgeable, that you can trust. Zach Brock is absolutely somebody that I trust with my clients. And I know you can trust him too. So if you are looking for insurance, if you need to just talk to somebody, you just need some advice. If you got an insurance policy now and you want some advice, give Zach a call.
Yeah.
We'll have his information, and just make sure that you get informed and you have the opportunity to adjust a policy the way you need it to be adjusted. Not just what somebody's telling you need to do. So I want to thank you for coming on today and give us some good information of what's happening in the marketplace. I want to thank you for watching and tuning in. And until next time, we'll see you soon.